Man, guys, what a week. A decisive break, a very decisive break above resistance on Monday, followed by a close into the highs on Friday for both the S&P and NASDAQ. This is the stuff that bull dreams are made of. Why does that sound dirty? Anyway, it was semiconductors that caught us over that key resistance earlier in the week, and then the rest of the market took the baton and ran with it in the latter half. However, all of that was put to shame by what some of the Bitcoin and crypto proxies were doing, with several rising hundreds of percentage points this week. And they were all doing that while Bitcoin was in a consolidation pattern. So today, we're taking a special focus on those crypto proxies to see where the biggest opportunities are for the coming weeks. And yeah, okay, I'll sprinkle in some of our favorite names, but we're focusing on the proxies today. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and a very special welcome to all the new subscribers who joined this week. Also, I need to give a heartfelt thank you to James from Invest Answers, who featured one of my chart setup videos on Monday. That is very kind of you, James, and the vote of confidence is not taken lightly. Also, I'm very thankful for the ratings boost because this is very new. So for those of you who are here for the first time, just to give you a little overview, I generally post videos twice a week. So Monday after the market close, we'll do an overview of the macro and we'll project for the week ahead. And then on Fridays, we'll do a weekly wrap up. We'll review all the charts and we'll get in position for what's to come after the weekend. Aside from that main content, I also put out intermittent trading education content, and I'm putting out more conversations with traders that focus on different areas like pair trading, perp trading, options trading. So more of that's going to be coming. If you do have any requests, leave those in the comments. If there's a specific chart you want to see, I'll try to address that in the next video. If there's a specific question you have or something you really want to see in trading education, I would love to hear from you so I can address that as time allows for more of that educational content. Now, last bit of housekeeping before we get into it today. I'm going to do something a little fun, a little bit silly, but I think it's fun. Since we hit 1,000 subscribers, I'm going to give away one Solana to whoever can leave the best roast joke in the comments down below. Now, I know a lot of you weren't here since week 1, but week 2, someone on YouTube already called me One Punch Man, so that one is taken, but I'm looking forward to see who can be the most creative. This is a democracy, so whichever joke gets the most likes is going to win, and we'll call that out on Monday. We can connect on X, we'll figure out how to get you the Solana. Now, since this is Friday, we would normally recap the big events of the week to help us position for the week ahead. We'd also go over dumb chart of the week, which United Healthcare is really in the running for that, but I want to give it one more week to see how dumb that chart can be before I do a segment on it. So we'll do that next week. But things were pretty quiet with Trump in the Middle East and also with closing into the highs of the day today. It really set us up for more bullish action ahead. But that said, I will say a lot of the charts are starting to look a bit toppy and overheated. So I'm expecting some corrections next week. We blew past that 200 DMA on the S&P 500, and normally key levels like that are kind of a magnet for a retest. And actually, just after the close today, Moodys downgraded the US's credit rating and things began to dump a little bit after hours. So let's see, maybe that's going to get us to that retest early next week. We'll just have to wait and see. But overall, I would say the charts are looking pretty darn solid. And since we didn't retest the low of last Wednesday, that's kind of the line in the sand below the 200 DMA, that swing low. Since we didn't retest that, I anticipate we are going to see all-time highs sooner than later, and every dip from here on out is a dip for buying as far as I'm concerned. Also, a shout out to Teluca Blake for flagging that story for me on the US's credit downwriting. So let's dive into the charts. We're going to look at a few of the key indices, a couple commodities first, and then we'll get into Bitcoin, crypto, and all those proxies that have been running wild. Okay, starting here on the S&P 500, and you can see that we blasted through that 5,900, and we said on Monday that between 5,900 to 6,000, we would begin to see resistance from all this past trading volume back here. And so we blasted through 6,000 is the target overhead. But now with that after hours action, I think that opens us up to test the 200 DMA from the top side for support. So that would be coming in at 57.60. So look out for that next week. And here is that swing low from not this Wednesday, but the Wednesday before. And last Friday, I was saying that this is the line in the sand. If this isn't broken, I don't think we see that double bottom style scenario with a bounce away. And the fact that we blasted through all this key resistance on Monday and set these new highs now really sets us up for all-time highs and every dip from here on out being for buying. Now, I generally believe that to be true, but we always have to keep our head out the window, as James says, and we have to be looking out for breakdowns. So if this 200 DMA fails next week and we break down, that might be a different thesis. And way down here, our lowest target would be this gap fill at 5,300 on the S&P 500. And if we extend this former downtrending resistance that we broke out of, that we almost had a back test on here, I could see this also being support if for some reason we break below this gap fill. But that's worst case scenario, and I honestly don't anticipate that happening. I really anticipate us finding support here at the 200 DMA. If we wick down, maybe at 5,700 even, we find support right there. If we look at the NASDAQ, it is a very similar chart, also closing into the high of the day. We have the 200 DMA and support here at 20,282. That would also be this little gap fill up from the start of the week. So that's a very logical point that I would be targeting next week on this indice. Again, you can see on the S&P 500, that gap fill is below the 200 DMA. It's down here at about, what is that? 5,700 even, which is where the 50-week moving average is, that turquoise line. So keep those two marked on your charts as we move into next week. Okay, one other thing we need to cover is just SMH, and this is the VanEck Semiconductors ETF. So you will see that the chart on TSM or NVIDIA looks relatively similar to this, but this is just a conglomerate view of the entire space. You can see on Monday we had that big gap up and ran strong for the first half of the week. And then on Wednesday, we started cooling off and now we're consolidating, which is totally to be expected after a big move like this. But the encouraging thing was that the rest of the market, like I said in the intro, took the baton and kept running, driving the overall S&P 500 and NASDAQ up. And this is also encouraging because to see all-time highs, we need semiconductors to come along for the ride, and they had been lagging the market. If you took SMH divided by QQQ, you could see that it was just in a downtrend similar to this resistance here, and it just broke out, showing that now the semiconductor space is gaining strength against the NASDAQ again. And if you missed Monday's video, take a look at a chart we shared there showing that TSM and NVIDIA are still some of the best values in the market. And just because everything is measured in the US dollar, we'll take a look at the DXY real quick. You'll see the DXY did find some strength off that inverse head and shoulders off the bottom. We thought at the most it could maybe make it here to 102.50 to this resistance zone, but we have found resistance at these past peaks here, and we started breaking down in the latter half of the week. If we zoom out from the highs after COVID here, we have been for the longest time expecting a macro breakdown on the US dollar. It did consolidate a lot longer than I thought it would, and we did set that lower high right here. And even if we do find a little bit more strength and bounce up, I'm anticipating more of a breakdown in the US dollar. If Trump 1.0 is any indicator, the value of the US dollar will continue to drop, and that will help US exports in the global market. If we go over to gold briefly, and I don't want to say we called this, but we did say that this looked like a blow off top. There was a chance it would hit 3,600, but this had all the telltale signs of a blow off top and then consolidation. And honestly, I would have thought that the 3,200 support that we had built here would have held a little bit longer. And we broke down from that this week and closed kind of right below it today. So I'm looking out for this to continue to break down now, and we're targeting that psychological $3,000 an ounce level now on gold. But a breakdown in gold is good. If you see weakness in gold and you see weakness in the US dollar, that means it's a risk on market and folks are piling back into stocks and other risk assets. So that will pump our bags. This is something we're looking for. And also we've seen all of the last 18 to 24 months that Bitcoin and gold tend to not run necessarily at the same time. When Bitcoin was consolidating for that 8 months last year, gold was running up. And then in November when Bitcoin ran, then gold started cooling off, and they've just kind of had this back and forth inverse correlation. Okay, last one, just because a lot of you have been tracking this trade with me, and that is natural gas. And if you remember, there was this head and shoulders pattern at the top, and our breakdown target is down here at $2.60. I missed this first breakdown, and then when I saw this rally up, I got really excited that I might get another chance. So I took my first entry here at the neckline, and it stopped me out of the trade. And then I entered again because I saw these previous peaks. I think this was on Monday. Yeah. And natural gas has continued to break down from there. This was actually my most profitable trade of the week. I'm using KOLD, which is a leveraged short ETF on natural gas. BOIL would be the leveraged long. So definitely be careful because these are big moves. If it does hit our price target, that would be a 34% drop roughly. And on a leveraged ETF, you can see how if that turns against you, that could be quite risky. I did take 25% profits today just because we were into these past resistance zones where we got a little rejection last time, and you can just see all that lining up on the chart here. So I took 25% off. I rotated that into Galaxy Digital. We'll see if this continues to break down next week. I would be very excited about that. If it bounces and maybe backtests some of these levels up here, I would reload that 25% and see if the correction continues from there. One to keep your eyes on, definitely a trade you have to manage a bit more actively because commodities can be volatile. Okay, moving on to Bitcoin on the daily time frame here, and you can see we've just been consolidating all week. We have that very strong resistance overhead at 104,800. Yes, we've wicked above that, but the reason I'm calling that the biggest point of resistance is because if we go back to our previous all-time highs, we've only had 5 daily closes in history. I guess you could maybe count these as barely, but let's say that's in the same range. So 5 daily closes above that range. So Bitcoin has some resistance here and some work to do. Also, it needs to cool off and build up steam again after this big move up. I did hear some traders speculating about a bit of a diamond top pattern happening here. And so to measure that, you take the center point and you would put that at the breakdown, which I think if you take that, depending on where it breaks down, it would put us at around $98,000 for a target if that pattern did break down. And there is a lot of support at 98,000. I wouldn't mind seeing a pullback like that just to build some more structure before we continue on up. But really, we just need to watch this. And after this big bar in the middle, we have been forming higher lows. So overall, my thesis on Bitcoin is that we are still going up, but we're just consolidating and we're getting ready for that next move. If we do zoom out to the weekly, just looking at a bit of Elliott wave structure, we do have our wave 1, corrective wave 2, wave 3, corrective wave 4, and we're starting on a wave 5 now. So this is why we're saying we're anticipating more of a move up. And the thing I want to remind you guys of with Bitcoin is that it is a commodity, and generally with stocks, the 5th and final wave isn't the largest wave, but for me, just looking at history on Bitcoin and crypto in general, that rule doesn't apply from Elliott wave theory, and often the 5th and final wave can be the longest and strongest wave for this as a commodity. So a little bit of nuance there to look out for, but just something I'm keeping my mind open to as we're targeting new all-time highs. Okay, moving over to Solana, I've just got some lines here because I was doing a little live perp trading class this morning. But if we go over to the 4-hour, you can see similar explosive move up to Bitcoin. We're consolidating. We have a very clear level of support right below here at 166. I wouldn't be surprised on this move down if we wick down just a little bit further. There is a fair amount of liquidity right now at like 165.5, somewhere around there. So maybe we tag that. If we do drop below that, say in the scenario that Bitcoin drops to 98,000, then let's just draw our fib extensions. And normally I just have the 50% level on here, but I put in the 382 and the 618 for the class I was doing this morning. And you can see how right now we're getting some support at the 618. I mean, granted, we've wicked below that. But what's also interesting is this previous peak at 157 also lines up with the 382 right there. So I would say that's some confluence for me of previous peaks and the 382 being what I would imagine to be the lowest we would go in a correction If we do break below that 382 at 157 and change, then there would be more weakness in the chart to me. But zooming out, the major overhead level is that 195, which is right here. And that is the 50% level from the all-time high to the correction low. That is normally where we can anticipate the most resistance coming in. And you can see how that also aligns with all these previous trading ranges. And also if you have the 618 and the 382 level up, you can see how just we bounced into that as resistance here and here, how this provided support, the 382 down here. Those are just some of the important fib levels to pay attention to. Again, a lot of the time, most of the trading I do is just based on the 50% level. And these are just nice to see because they are the second most important in my mind. Okay, and last couple things before we get onto the miners, we have to cover MicroStrategy and Tesla just because I know a lot of you are pair trading those. If we are looking at MicroStrategy on the 4-hour, we have, even on the daily, this looks like a topping pattern, even though there's still strength in Bitcoin and the proxies have been performing well. MicroStrategy has been underperforming. As I said on Monday, I think Michael Saylor is really tapping the ATM. Let me turn that off just to clean things up. And you can see, you know, we had a mean reversion spike already. We've had a bearish divergence on the 4-hour RSI. If we go to the 1-hour, you can just see that mean reversion is fairly spiked here too. And we did hit the top of the range on the RSI on the 1-hour. Yes, this can get into oversold territory, but I would much rather see some structure build here. And we've had this underside support on the RSI. I would love to see MicroStrategy cool off and then really go for a big move higher because that means we can have further to run. If you go back to the previous run up in November, you can see what the RSI did here. And by the time we got to the top, it started cooling off a little bit. And then we had that final blow off top. And you know what? Let's just, for fun, draw where this underside RSI support would come in. It's not totally valid because for RSI support or any support line to be valid, you generally want 3 touch points. But on the third one here, we broke down, and that also corresponds with our peak on MicroStrategy. So if you haven't been following past videos, I just use uptrending RSI on Bitcoin and MicroStrategy. It works really well. As soon as you break this down, that's a good indicator to you that momentum is coming out of the trade. But I would anticipate with the strength in Bitcoin and MicroStrategy that we bounce away from this RSI after cooling off for just a bit. And cooling off doesn't mean we have to drop back down aggressively. Cooling off could also be some sideways chop and consolidation. If we are looking for, say, a line in the sand, this previous peak and consolidation range here at just over 140, this would be my line in the sand. If we drop below that, there would definitely be something bigger wrong for me and I would have to reevaluate my MicroStrategy position. But anything up to that point, I would consider a healthy correction. And just for fun, if we draw our fib levels in, not to the penny there, but close enough, we are coming in at 333 for the 50% and 355 for the 618. So I suppose you could say anywhere in that zone could work, but I would love to see that 340 level right about there hold, which is right in the center of that range. Okay, looking at Tesla, we're here on the 4-hour chart, and you can see how mean reversion has definitely spiked to over 2 standard deviations, and we're overheated here. I would also like to see this come back in to test this trend line and hopefully bounce away. If we go into the daily, not quite as overheated, but you can see that we are starting to get to the top of the range where generally it does not live for long periods of time. So this may still have a little bit left to run in it next week up to that 160, I would say, to 167 level here where we have had these previous peaks. But you can see that that has played a lot of resistance for Tesla. And if you're pair trading this in MicroStrategy, it's time to pay attention because it might be time next week to rotate back from Tesla into MicroStrategy as this cools off and maybe MicroStrategy settles a little bit. If we are looking at areas for support, just down below, so it was notable when we broke that $325 range. And when we broke that, I was saying earlier this week that we'll probably go to 360 to 367 relatively quickly. It looks like that's in play right now. And if we do correct, I would anticipate this as being our first support. Below that, I suppose you do have the psychological $300 level, and you have these past couple peaks here. And then we also do have the 200 DMA creeping up. At the very most, I could see Tesla potentially, if there's some bigger cause for correction, testing that 200 DMA. But we really want to stay above that because you can see that when we stay above the 200-day moving average, we're in a stronger trend. And when we're below it, we're generally a bit weaker. And if we go way back, below has definitely been more of, dare I say, bear market territory if we can consider, shorter time frames, bear and bull markets. But this asset moves a lot. I definitely think in the long run it has more upside, but this asset moves a lot, and just watch out as we get into that resistance. Okay, let's get into some of the first Bitcoin proxies, and these are just the Bitcoin miners, which haven't run as much this week as some of the treasury plays, but I think these are worth covering as well. So we're here on CleanSpark on the daily. You can see on the RSI, we have clear underside support. We haven't peaked on mean reversion. This still has room to run, but if I make this chart full screen, you can see that it's obviously been struggling at the 200-day moving average, and we've had a pretty clean stair step up with consolidation in each of these ranges. I was honestly hoping for a breakdown of this level at $9 this week to get a better entry. Maybe I'll get lucky with that next week. And I have a limit order placed down here right on top of this volume cluster at $8.25 above these previous peaks. So I sold out of my CleanSpark a few months ago. I would love to get back in there. I feel like I missed the lows a little bit on this one. They're still the most efficient miner, but keeping my fingers crossed, maybe I get lucky and that limit order fills. And I suspect since we've been coiling, once we break the 200-day moving average, this might have one last big move left in it. And if you've ridden this up to the $20 range a few times, this is your reminder now to get out while the getting is good, because it can swing up and it can swing down violently and quickly. And I have seen six figures in profits go away quicker than I would care to say on this one, but I'm sure you all are familiar with that. Okay, last thing I will say on CleanSpark, even though this doesn't look like a big move compared to the history of the chart, if we are just measuring this out off the bottom from the 643 to our highs there earlier this week, that's 61%. So there is definitely value in getting in early and getting in hard on these names when they're at low prices, because right now from here to these previous peaks, that would only be, I'm taking it from the highs, but from here to the peaks would only be 73%. So even though visually that looks like a lot more gain, you already saw that in this little move down here. Okay, going over to Mara, and this was one where I actually got in on the lows before this breakout of the downtrending resistance, and we've had a stronger move away. Very much like CleanSpark, we have great underside support on the daily RSI. I mean, you can just see a very clear line here that you can draw in, a little wick below it, but a general support, so you can tell if that's breaking down. We still have room to run here on mean reversion, but we are into the 200-day moving average. So if the broader market corrects this week and we see a little bit of a pullback here, we have good support around the $14.80 range, and that could get the daily RSI into this trend line before breaking away for a move higher. Okay, getting into the fun stuff, the crypto treasuries, and we're starting on DFDV, DeFi Development Corporation, formerly known as Genova, JNVR. And I tried to do a bit of analysis on this on Monday for Chewy, but we were only seeing part of the data here because when the ticker switched, TradingView didn't bring in the previous data. And now it's here, so we can do a full analysis. So we did have this blow off top today. I'm calling it a blow off top because this was on news of a partnership with Bonk on Solana, which caused a 67% rally from $84 to as high as $151 and change, almost $152. And while I'm happy for the partnership, this does feel like a bit of euphoria to me. And a partnership like that for an already hot valuation at the $100 range doesn't necessarily make sense. If I was holding this, which I did not get my limit order filled, but I would hope I could be objective enough to say, hey, it's time to take some off the top. You don't have to get out of your whole position if you want to see what it can do. And some of the other Solana treasuries in Canada and Japan have run thousands of a percent, but you started here at $5. I'm assuming not everybody got in right at $5, but to go from that to $150 in a couple of weeks is quite remarkable. So lock in some profits if you can. If we're speculating with some Elliott Wave, and I'm not the biggest Elliott Wave guy or the ultimate Elliott Wave expert, but if we're just taking a wave 1, wave 2 correction, wave 3, wave 4 correction, and then wave 5. And again, as we said earlier on, generally an Elliott wave, the fifth and final wave, isn't the longest and strongest wave, except for in commodities, and I consider crypto to be a commodity. Then that would set us up for an A, B, C style correction. So we have support right here at that 100 psychological number to $91 right here in the middle of the range, which lines up with these previous peaks. There's also strong support at this gap fill and previous peaks at, let's just say $75 for round numbers. So think of 75 and 91 as your strongest immediate support. And below that, I would say that $50 level down here to maybe $54 would be that next zone of support down below. Okay, next one we're going to is ASST, and this is the second strongest in my mind. You'll see with some of the other ones as I draw this 50% level top to bottom, and these are just a few days old, so I'm really using all the tools I can to try to assess strength and weakness between them, but you'll see that a lot of the other charts have broken below the 50% level. So I got in last Friday at like $2.75, and we ran up all the way to almost $10. And there was just this little bit of an uptrend. And when I saw we were breaking this, I mentioned this on Monday, that I got out of a fair bit of my position as this broke down, and then we back tested it and rejected away from it. So I got out of a fair bit of my position here. And again, I didn't know if this was going to continue running indefinitely, but all I knew was that I had made almost a 3x, and this speed of the trend was slowing down. So very, very simple TA, just using the break of this trend line to get out and lock in some profits. Then I drew this range top to bottom, and I noticed we were getting support here at the 50%. And I got faked out a little bit, but I'm just going to talk through my trade and what I did right and what I did wrong this week. So I took my locked in profits and I bought back in here, expecting a bounce away from the 50% because it was getting support for so long. When I say so long, I mean a handful of hours. And then we broke down, and on this breakdown, I got out of the trade right here, and I did not have the 382 fib level drawn. I just had the 50%, so I wasn't paying attention to this in the 618. And this is a reason why it's important to draw these in, because you can see how the 618 provides some temporary support, and then the 382 provided a lot of great support right here. So I didn't know how far this was going to break down, and then overnight it just rocketed back up, and on this retest I got in. So now my average cost basis is $5.33, and it bounced up away from that again. And I've drawn this zone here as just the most traded zone with all this support and resistance of where I would anticipate support and resistance to remain. And we did break down from that today. There is a little bit of underside support right here, and I'm just watching this to see what it does. I've set my stop loss by my entry, so it is a risk-free trade, but I'm hoping that if we go down, we bounce away from the 50% and this continues, but we'll just have to see how things shape up for ASST. And last thing I'll say, because these are volatile vehicles, they can be great for day trading. This one just today from the bottom to the top was up 84% right there. And then on the flip side of that, for the negative, if you're going from the top to the bottom, that's down another 20%. So you can see how they are moving quite aggressively in a number of hours. So it can be a wonderful vehicle for day trading. It hasn't settled out to the point yet where I'm saying this is a long-term hold, but I'm just using this to play the market and try to lock in the profits that I can. The last thing with all of these, just trying to give yourself a little bit of the edge. The one thing I've found that is giving a fairly good signal on a lot of these is the 30-minute RSI. So if you look at the 30-minute RSI when it dips into oversold on the red right here and then dips into overbought, granted we didn't hit that exact peak, but if we even just go back to DFDV and we go to the 30-minute, you can see 30-minute oversold, overbought, kind of marks that top, pulling back. We didn't quite get all the way to oversold here, but all these other little dips, 30-minute oversold, 30-minute overbought, very close to those tops, a little bit of bearish divergence. So not an exact science, but at least for these assets with not much trading history, it can give you a little bit of an edge. Okay, moving on to the next one, which is CEP. And this was another one where just the simple 50% level had me get out of the trade. So I got into this one, I think it was around $27. And when we had this run up and then couldn't sustain the 50% level, that was illustrating weakness to me. I said, when it dipped down here, if we couldn't get back above, actually I said right here on this candle, if we can't get above the 50% level and hold that as support, that's a sign of weakness to me. It has just been bouncing up against this 50% level for the last week plus or so here on CEP, but it is definitely looking weaker than some of those other names we've been looking at. And you'll note that the Solana treasury is vastly outperforming the Bitcoin treasuries. And I suspect that might just be because there is more growth potential behind Solana. MicroStrategy is already in the spotlight in terms of a Bitcoin treasury, and it'll take them a while to catch up. ASST is doing a bit better because they have some unique aspects that CEP doesn't have, and CEP is also a SPAC, which some folks don't like. So I would tread carefully with this one. If we can get above the 50% level and turn this into support, maybe it could run a little bit more. But out of the three we've looked at so far, this is not at the top of my list. And full disclosure, when we couldn't hold above the 50% level here, I sold out of my position and I moved that into ASST. Okay, saving the ugly one for last, and this is NVVE. Let me just get rid of all that so we can just focus on the chart. And you can see how on their Bitcoin treasury announcement, they had a big spike up, rejected from the 200-day moving average, and we are back pretty much to the bottom of that trading range. I honestly don't know the specifics of their Bitcoin strategy, but this alone is enough to tell you that the market does not like it and cannot save their business. If we go out to the daily, just looking at this chart, it has been in a perpetual downtrend. I think this was, holy hell, hold on. Oh my God, just keeps going, you guys. I should have looked at this beforehand. This must be some kind of ETF setup where they keep swing, because this doesn't even make sense. This does not make sense. This is like those ETFs where you go back and you're like, this stock was at $20,000 at one time. No, that's just a factor of things eating into the value of the ETF and it consolidating over time. That's why you don't hold those over the long run. But anyway, all that to say, I would not touch this one with a 10-foot pole. Stay away. And the other plays are already risky enough and are showing much more strength than this. So NVVE, you're the dumb chart of the week. We didn't do the segment, but this is the dumb chart of the week for sure. Okay, so that's it for the charts. In terms of the week ahead, just really keep your eye on the 200-day moving average on the NASDAQ and the S&P 500. We really want to see that turn into support, and I'm going in with the mindset that dips are for buying. Now, for those of you who haven't been here, I've overall changed my stance this year from more of a long-term hold investment perspective to a swing trading perspective, because I knew a new president was coming in that can be a bit volatile. And I don't mean that as a critique or as a political statement. I just know that a tweet of his can shift markets up or down, and we've seen that play out. So my plan was already to take profits from my long-term holds this year. So I was fine taking those profits early and then switching to a swing trader's mindset to maximize those swings up and down throughout the year. Now, given the strong recovery we've had, I think those all-time highs are incoming, but 3 or 6 months down the road, we could still see more chop. So be ready for that. Keep your head out the window and make the most of this volatility. Don't marry your assets or be so in love with them that when you see a clear blow off top, you just hold through it and ride it back down. At least hedge or consider getting out of part of it to rotate into another asset that hasn't run yet, and make the most of the opportunities that the market is giving us. We're going to enter quiet periods again one day. We'll see another bear market one day, and we don't always get the gift of this volatility. Yes, it can be stressful, but you can also make a lot out of it. So that's my encouragement to you guys. Thank you for following along. Have a lovely weekend, and I'll see you all on Monday. Bye for now.